Good afternoon. This is the Market Edge Tuesday Tech Talk, and we're going to quickly review the last couple of days in the market and try to figure out what the market wants to do over the next couple of days. We'll take a look at a couple of the charts on the different indexes and look at some of the breadth indicators and just look at a couple of the different sectors and industries and see what might be going on here. If you come down here and click on the market letter, this comes out Friday afternoon after the close. And it'll give you a little wrap up of what happened the previous week. Okay, first thing we're going to look at right now is the CTI. This is one of the components that helps us determine our market posture. Currently, the market posture is bearish. Last week, the CTI was at a -8. We're going to switch that to a -10 this week, and we will probably keep a bearish market posture for the next couple weeks at least, going out into April. The momentum index is a neutral +3. It's up a notch. That meant that some of the other indexes are outperforming the Dow. And we're also neutral on the sentiment index. It's at a +0 right now. If you go a little bit lower on the market letter, you'll see this calendar of technical events. And you'll see the last two events were actually bullish. And one of the ways to interpret this calendar of technical events is when you're going along and you start to see, if you've been bearish for a while, you start to see these things roll over to bullish. It means you're at a bottom or very close to a bottom. So this is encouraging, at least, that we're starting to see some of these things roll over. If it's on a stock, if you go into the stocks page and pull up a Techniscan report, sometimes you'll see a stock that's been bullish all along. You'll start to see some bearish things flip over. It could mean that the stock is close to at a top or very close to being at a top. Okay, let's take a look at the Dow Jones, see what was going on with that last week. Go up here and click on charts and click in DJ, and we'll go to DJ Industrials. Okay, we'll go here, we'll change some of the indicators we want to look at. Take this simple moving average, we want to look at the 100 because that's one of the areas that this market has been range bound in. I'll also change this to a simple moving average too. Get rid of these Bollinger Bands. Okay, first thing I want to do is draw in this trend line from the peaks back here in January. Draw it down through here. You can see that this is going to coincide with the 50 and 100-day moving average, where it looks like the 50 is getting ready to cross over the 100-day moving average. Indicators down here are still pretty much neutral. We're here at about a 44, so we need to get above 50 before we're starting to see some positive momentum. We may get there after today. We were up about 500 points earlier today. So anyway, what we want to look at here, we've had several tests of these lows down in here, but what we're at going into the sideways range is basically that we're in a range-bound market until we can, which is fine until we get into earnings coming up here in about, really next week will be the big time, but we do start Wednesday with some of the big banks reporting. That may give us a little bit of a clue as to how strong the earnings are going to be this quarter. But for right now, we'll go sideways in this thing here. Even with today's action, we haven't even made it up to the 100-day moving average. So stuck in that trading range between the 100 and 200-day moving average. Okay, we'll go up here now, look at the S&P 500. And you're going to see a very similar chart. Again, you have the trend line coming in here, which if you draw it down in, a little bit higher than the Dow. But again, we have this 200-day down here, and we have the 100-day moving average up here, trading sideways back and forth with the volatility, big swings up one day to the next. RSI, 14-day RSI down here is still around 43, 44. We may get up to that 50 level today because we're up about at 1.5% going into this afternoon. So again, until we break out of that, and with the catalyst that may break this up above these would be strong earnings coming up here over the next week or two. Okay, we'll go to the NASDAQ. It's COMPX if you put it in there. That's not going to be it. Go CMP, here we go. Pull up the NASDAQ. Same thing. You know, we're going sideways here in this for the last like 2 weeks or so. Gets up here to about the 100-day moving average, rolls over, comes back down. Again, range bound between the 100 and 200-day moving average. Even today, we haven't made it up to the 100 yet. So it's got some work to do, and the indicators down here, RSI is down here around 41. We need to get above 50 before we start seeing some momentum, positive momentum indicators going on. And again, these little arrows up here will show you that most of the events that are happening with the NASDAQ are still bearish. Okay, next one I do want to take a look at today, because we had some action in here. We're going to look at the Russell 2000 right here. This is a small cap index, and we're still range bound. However, today's action came right up to this 50-day and 100-day moving average. That's I want to keep an eye on that, because we would like to see the small cap stocks outperform the broader market. If we can get a little bit of follow through, it would be very positive for the broader market. Now, one of the things you can see over here is when you have these big up days. We're back here. This is back in January. This is March. Okay, but lately we haven't had any follow through, especially if you go back to the Dow. We haven't had 2 up days. Well, here we have 2 up days. There just last week, Wednesday and Thursday. But before that, in March, you only had back-to-back up days in the Dow 2 or 3 times in the whole month. So the market is having a little bit of trouble. It kind of gets extended here on one day of big ups, and then we kind of go back and have some back and forth fill-in. So anyway, that's something you want to keep an eye on until we get some a catalyst, which may be the earnings, to move forward to get us up a little bit higher. I think we're it's going to stay in that trading range. As far as the breadth goes on this, if you go back to the home page, click on Market Recap, you get some charts of all the different indicators. What we want to look at over here is you can almost draw a pattern here. This is the NYSE Advanced Decline line, and we're getting a little bit of positive divergence in here, where even though we're down here testing the lows from February, the AD line's not reaching that far. It's coming back here and trying to work its way a little bit higher. It'll move up again pretty good today. I think we'll gain about 1,500 to 2,000 units here. The NASDAQ, same thing. You came down here, you didn't quite test, but we're starting to work our way higher. That's a little bit of positive divergence, which means more stocks are starting to have already bottomed and are working their way up. Just below that, you have the new highs, new lows on the Dow. Again, we're seeing some contraction in the number of new lows. We want to see this thing start to break out here, which may happen once the earnings come in. For the big banks come in with some positive earnings, that'll help all the banks to move up. That'll cause a little bit of spike in this thing. We'll start to see the blue lines head higher. And you're also seeing that contraction also in the NASDAQ, which is what you want to see. So while we're contracting and going sideways in this range-bound market, I think that what we're seeing with the positive divergence and some of the little different indicators and breadth is probably telling us that we can probably get a breakout to the upside once the earnings start to come in. Now, one thing I wanted to tell you, several weeks ago we were talking about when we used to look at the different sectors, we talked about XLE. I want to go back to that briefly before I go to industry groups and all. XLE over here, if you see this, we talked about for several weeks how the energy sector had looked like this is a perfect bottom process in here. We're going back and forth with the 200-day moving average. Momentum was actually starting to pick up, so that's positive divergence. And the 30-day stochastic, which I use, had crossed over 50 and was working its way up higher. Okay, well today, you can't see on this chart, the XLE broke above the 50-day and the 100-day moving average up here around 67, 68, somewhere in that area, which is a pretty good breakout. We also have about a 3 or 4% rise in crude oil prices too. And we talked about that where a while back, we talked about the Fibonacci retracement in oil going from the old highs to the lows, and my target was $70 if we could get through that $62 area. And today we're at 66, 67, and it looks like we're going to finally get to that $70 range on oil, which is the 50% retracement. Okay, let's go ahead and take a look at some of the industries, see what might be leading the market over here. Today we'll go back over here, we'll click on relative strength. You can see over here that we've had a little bit of the last few weeks, some of the more defensive industries have been leading the way. Here you have household products, non-durable is one of the strongest groups right now. You also have cosmetics, personal care. That's one of the consumer staples. But you still have, which this is a positive here. You have the internet financials, which if they report good, strong earnings, they should have another breakout and start moving higher. They're outperforming the broader market by 14% right now. And semiconductors are also coming back in. If you click on some of these things, you can go into break down the industry group, and you'll find a list of all the stocks that are actually outperforming. In this case, Intel still looks strong, Micron still looks strong, but you have a lot of, you can see the weakness in the semiconductors over the last few weeks, as most of them are ready to avoid now. So, this is still one of the stronger sectors in the market. You can see by this chart, we're rolling over, but we're kind of moving a little bit sideways here, and perhaps when the earnings come out, we might see some more strength in that. Okay, now we'll look at the ETFs. Generally, what we do on this thing in the market letters, we want to see what's strongest over just the last week. In this case here, we've had a little bit of a pullback in the U.S. dollar, UUP. If you look at the charts, we're kind of range bound in that also. But when the dollar goes down, you'll see a bump up in commodities. In this case, blend commodity, energy commodity. You can see it moving higher. Base metals commodity, even the agriculture commodity. Although the broader condition is weak, they're the strongest ETF groups over the last week. So you can also dig into these things as far as the sectors go. Alternative energy is outperforming, and you can also see technology was up about 0.75% last week, and internet and energy. So those are still the if you're even though they're not an industry group, but the sector is the broader category for the industries, and technology. Some of the internet groups and financials and energy are still where you probably want to be. And here's financials down here that was up 0.5% almost last week. So those are still the groups that should lead us higher once earnings start to come out. Okay, before we break away, one last thing we want to take a look at every week. Some of the guys here will put together what we call Dr. Market Edge Talk stocks. And if you come down to the bottom here, they'll take 3 stocks that were in the news and Barron's or something that were reviewed or upgraded or downgraded. Last week we put up Microsoft, and what they do is the guys will put together a little bit of the fundamental picture, what's going on. Then we take a look at the second opinion. In this case, Microsoft was upgraded at 68 last May, so we've been in this thing almost a year, and the stock is up about 30% in value. Still looks good, although it's still starting to break down a little bit with the broader technology sector. But we'll look at that. We're still keeping in there a little bit right now. Here's the chart. We'll go over that. You can see how we've kind of found support at the 100-day. Microsoft starting to, it's also in this sideways trading action. Most of the technical events are still bearish. As you can see down here at the bottom, we do have one bullish one sneaking in. So if you pull up a Technoscan report, you'll start to see some of these. If you start to see a couple more bullish events start to pop up, you'll know the stock probably has bottomed over in here, and it may be time to go into Microsoft. The summary, we'll also give a summary. The technical condition for Microsoft is deteriorating, with 6 of the last 10 events since late January being bearish. But again, what I look at in this thing is I want to see when these things start to pop up, and when you go on 8 or 9 bullish or bearish in a row, and all of a sudden a bullish pops up, and the next one's a bullish. That means you've probably hit a bottom or are very, very close to it. And we'll talk a little bit about this thing. In this case, you may want to wait until Microsoft finds the bottom and technical condition strengthens before looking to buy. In this case, you want to see another 1 or 2 events come up bullish. And again, we go over about 3 of those every week, and that helps you to kind of look at how to use the site to look at some of your different stock picks. All right, that's going to do it for this week. If you have any questions on other stocks, you can email them in, and we'll talk to you next week.